Good morning. It is February the 6th, 2018. And the question on everybody's mind today is, will the selling in equities continue again today? And this is very reminiscent of the break in 1987, which I lived through. It was the best 2 weeks of trading I'd ever experienced in my life in the indexes. And fraught with risk, couldn't trade with stops. If you didn't like your trade location, wait a couple of 3 or 4 minutes, half hour, and it'd come back and bail you out. It took capital to play, but in high volatile situations like this, you cut your size, which is difficult to do if you're only trading in one lot. And buckle up and get after it. We'll start with our disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have been overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, if the Emini continues to sell today, I imagine treasuries will move higher. We have a 3-year auction, and that tends to take the market higher. The bias is to the upside, so we'll see if that works out. If the Emini continues to sell today, the Dow is called down 750 points right now. Then I imagine we'll be able to retest something above 122.08, maybe 122.12. So big things are happening. Overnight, the rest of the world's markets sold. Collectively, in Asia, the 3 major markets were off 13%. That's on average about 4%. In Europe, they were off about 6%. That's about 2% apiece. At the height of the selling last night, the E-mini was off 12.2%. So the rest of the world catches up, and we'll see what happens today. Back in 1987, the low came in on that Wednesday. Tuesday was just up and down and back and forth as the big forces moved, but we had a 25% sell-off from that Friday through that Monday. And that's when all sorts of triggers and stuff were set, etc. So if the stock market does sell, it's not going to be too difficult to take out the highs. I've got the note on 1-point increments, 2-tick increments, and the 30-year on 2-tick increments. So our reading at the edges is going to be plus or minus a tick on the note. Right now you can see that there's a seller at 4. And so just structurally, 3 to 7 would be sell 1. 11 to 15 would be sell 2. On the buy side, we had we got volume down at 24. And we've got this extension in Q at 23. So we'll make 21, 25 by 1. And 17 to 13 by 2. Today's news: international trade minus 51.9B. No one will pay any attention to that. Jolts 5.95. No one will pay any attention to that. IBD TIP business optimism index at 55.4. No one's going to pay any attention to that. It's all going to be the direction of the ES. And do we get another day of selling or not? Oh, that's where we find ourselves. Now, again, having played these, you need to make calls. You need to be engaged with the market, but you don't necessarily have to trade. This is a day where you can use it for experience, part of your 5,000 to 10,000 hours. Go in and trade sim, see how your ideas work out, and potentially extreme volatility conditions. And so we can get valuable insights on this. Given the volatility that we have, if you're on the right side of the market, volatility will bail you out as you get these great big swings back and forth. Yesterday, the first short covering rally we had in the E-mini was good for 70 points. You have to have capital to do that, though, so you need to be careful. Fitz back in '87, the markets were extremely thin too, and you'd have people come in those days with full S&P 500 contracts, 100, 200, 300, which would move the market 5 to 10 points. I mean, it's just going to be a fact of life. So just don't hurt yourself today, but this is a day that comes along about once every 25 years or 30, and you need to gain some experience doing that. So trade it sim. Okay, looking at the 30-year, 47.08 is where resistance is right now. If we get through that, then it really jumps up to the 16 to 24 area. On the support side, 8 to 16. Now these are in 2-tick increments, so don't forget that. And then there'll be support beneath the buck. It is the 3-year auction. We should find buyers at some point during the day. So we're going to make 16 to 20 number 1. Trying to pick up this area down here. We'll make 16 to 20. We'll make 13 to 9 buy 1. And we'll make 01 to 29 buy 2. On the sell side, we'll make the buck to 04 number 1, sell 7 to 11, and we'll make 15 to 19 sell 2. If the E-mini is selling, we do not want any part of the short side of the market. Again, this is not a day to shy away from. It's not a day to be afraid of. If you've got capital, there's a lot of money to be made, but again, for you that don't want the risk and the volatility, let's learn how to trade under these conditions. And obviously, you're not going to be using 4-tick stops on the bond or 3-tick stops on the note. I mean, so you're going to enter or take on positions with a pretty wide stop, a disaster stop. And you can get hit. But we do want to gain from today's experience. The cryptocurrencies are actually sold with equities yesterday. And what we may have seen yesterday is that a lot of the hot money in cryptocurrencies is stock players looking for some action, looking for some volatility. Well, they've certainly had it since last Monday. Okay, gold, 1350, kind of one of those market numbers held. Last night we had a 44.46 and 49.51 sell, so got up to our second sell zone. We love our number 2 points, and the reason again we love our number 2 points is that it allows the professional trader to go get stops just outside of the current action. And most of the time the market moves sideways. It's a little higher, it's a little lower, so day in and day out our number 2 points, just fading them are going to do you well. And that's where we were with gold last night. Okay, the spill is from 43. We've got this low right here at 39. I'm sure some of the strength in gold last night was, oh my God, the equity markets are selling. So gold is telling us that we might see the low on the opening and get a gut-wrenching rally in the indexes. And again, we don't know if that'll happen or not. It's something we have to see. So spill was from 43, so we'll make 40, 42, sell 1, and 44, 46, pick up this area here, sell 2, 34, 36, buy 1, and 30, 32, buy 2. But again, this is opportunity if you have capital, and if you trade size, you can cut it down and prosper. If you're with the right side of the market, you've got time. If you're on the wrong side of the market and you're wrong, you can't back those positions. As soon as you sense that you're wrong, you just got to flatten and start over again. And the trades that you're right on, like on the Emini, you got a shot at 10, 20 point trades, 30 or 40. So that's the reward side of it. If you move quickly, you're going to try to hold your losses in the 5 points or less. But I can remember 1987. I think everybody that was back there, and I mean, since 1987, the Fed has fallen over backwards to make sure that it never happens again. And they've done a pretty good job, but it'll be interesting to see what Powell comes in and does today. Okay, looking at the euro. The euro, of course, the numbers out of the Europe this morning, Germany's factory orders came in at like plus 3.6%. And again, they have the same problem we do. A large order can skew that. But Draghi would really like to see the euro lower to help exports outside of the European Union. Okay, 75 to 85 is going to be sell 1. That's pretty aggressive. 24 even, 24.10 will be sell 2. Trying to pick up this area right here. We're through our low volume number. The attractor down here is 22.85. We've got some volume down here at 40. So we'll make 40 to 50, buy 1. And 15 to 25, buy 2. And for us as a trader, if you've determined which way it's going, get something on at the market, and then add to the position as you head lower. And then the second you don't like it, duck the trade, flatten out, get out. Today's not a day of precision entry and exit. That's what you do on days that you don't have any volatility. Today it's just getting the direction right, jumping on board, riding it till you can't stand it anymore, and then getting out. By the seat of your pants, and a lot of your trading to date has been by the seat of your pants, so get in and enjoy it. Okay, crude, looks like there's a seller at 64 and perhaps a buyer at 63. So 63 even, 63.25, buy 1. This market will be the least affected, but if the stock market crashes today, I imagine crude will start lower too. They have been tied together. Sonny did a lot of work on that this past summer, and the correlation was pretty high. Glad to see you back in the room, Sonny. The skiing opportunities aren't as great as trading the markets, so Sonny's come back to join us here to feast on this extra volatility. 63.50 to 63.75, sell 1. 64, 64 and a quarter, sell 2. Okay, the plunge protection team is a definite possibility today. And if it were the previous administration, we probably would have seen them yesterday. What the Fed likes to do and how they play it, they tend to play with options, and their tendency is to let the first wave of selling go. So the people come in, all those that sell are short. The book has exhausted itself. There are no more sellers, and the Fed steps into the market and starts to buy options. That's the way that they typically handle it. There are no more sellers, and they get a lot more bang for the buck. So they usually let that first wave of selling under these conditions be absorbed, and then they step in and buy it. Now everybody on the plunge protection team is aware of this. They know that it's coming, so your great big primary broker dealers aren't afraid to provide a market for those that are selling, because they know the Fed's about to jump in with both feet and they're going to be taken care of. So it's not that these guys have a lot of exposure. Okay, the low at 25.31 and the Dow has suffered more than the E-mini on this correction. That's 12.2%. Most people expect a 5 to 10% correction, and with the extra volatility, it's gotten a little deeper. I'm on 4-point increments right here, so my precision, my price points, be aware, are plus or minus 4 points from where we call them. So we're going to deal with market numbers as best we can today. So looking at our first market number right here is going to be 75. Our second market number is going to be 50. Over the top, our first market number is going to be 25, and our second one's going to be 50. And you can see 25 to 50 has contained the action. 25 to 50 below has contained the action. So we've got about a 100-point range that we're facing right here, and we're at 96. The low volume number right here is at 1150. So we'll make our first sell 10 to 15, and we'll make our second sell 25 to 30, and we have to be more aggressive on the sell side than on the long side. The first buy will make 51.50 to 60, buy one, and then the low is 31 over here, so we'll make 20 to 30, buy two, right at support, and we'll see what happens. But again, we don't want to waste today. We want to make sure that we get it, and that you are sim trading. And there will be times that I will lose control of my software today. Just be aware that's coming. So we'll see if we can't make the most of it and gain from it. Jeffrey went through this a long time ago, I see, and Jeffrey's still alive and kicking, and everybody in the United States will be able to weather this storm too. So we'll get after it, and I'll be back with you as soon as possible.